Hi everybody. I hope you had a good time learning the earlier stuff that I taught. And in this presentation, I'll be taking you through the various candle movements that are there in the market. So there are various type of candle movements that you can see in the market, and they are basically you can have a bullish move, you can have a bearish move, and you can have candlestick uh, pattern price action basically in a range bound market. Now we are using the candlestick chart type to basically learn either intraday or swing. We also have a line chart, but that's just basically if you can't make sense of the candlestick patterns or the candlesticks. Those are used in rare cases just to get an idea in case you're not sure of what chart pattern you're looking at, and those just provide rates at a closing rate. They don't have the open high low close that we need to make a more informed decision in the market. Now let's take a look at this slide. This slide basically is a type of movement which is called rally. Rally means a price increase where the close is higher than the open. Then you have something called a base where price takes a breather, and you will have price consolidating sideways for a bit before the next rally upwards. So this type of movement basically is called rally, base, rally, where there is a bullish candle, some base candles, and price taking a breather and again a bullish candle. So this is rally, base, rally. Let's go to the next type of price movement the where you have the price dropping down, which and consolidating and then rallying again. So this is called a drop based rally pattern, and drop basically means where the the close of the candle is lower than the open, so there is a price drop. Then price takes a breather here, and it can either go up or down, but it goes up. So then we have rally again where the open is lower than the close, so the close is higher, price goes up. So this type of movement basically is when the market is dropping and suddenly the bulls start fighting back. Sellers try to bring the price down, but they can't. So you have few doji candle or small body candlesticks even without a doji. And then finally the bulls overpower the bears and you have a rally. So this is called drop base rally. Similarly, we have something like a drop base drop pattern where the bears have taken control of the market, the price drops, takes a breather, and then drops again. So bulls try to bring the price up, but finally the bears won. And this is just for illustration purposes. You need not have candles that look like this. There'll be small body candles, or they could be a slightly larger than small body, or they could be doji candles, but basically price will move sideways. So base means sideways movement and then a drop again in price. So it is a drop base drop. Now there's another type of pattern here, similarly like what we saw in the bullish pattern here. You have a rally where the bulls are taking the price higher, price takes a breather. Remember, these candle colors are not important, and neither is it important to have a doji here. What this simply means is price is consolidating here and then price drops again because the bears overpower the bulls and you have a drop. So you have rally, you have a base which is consolidation for a period and then drop. This will be found on all time frames, whether it's all these patterns can be found on any time frame, whether it's a 1 minute, 5 minute, 15 minute, 1 hour, daily, weekly, or monthly chart. So you have a rally, you have base, and then you have a drop. Now, let's take actual chart examples where we can see this. So, bullish momentum. The following is an example of drop. Can you see these red candles? It's dropping. Then you have this only a 1 bar consolidation, and then you have a green candle here. So, this is drop. You have your red base, and then you have a rally. So, this is drop base rally pattern that is demonstrated here. Let's go to again bullish momentum where you have You have this rally here with the two green candles. Then you have consolidation here, small body candle, some doji, and then again the price goes up. So this is rally, base, rally. So this is how you have this pattern playing out. Now let's look at the bearish momentum. In bearish momentum, the following is an example of rally. Can you see the green candle here? See the highlighter, you have a rally, you have consolidation, which is base, rally, base, and you have a red candle, so drop. So this is rally, base, drop. The bears overpowered the bulls, and you have a rally, base, drop. Let's take a look at the next one. Again, we are looking at bearish momentum, and here we have drop, base, drop. If you see here, this is a red candle. Again, we have base, and then again a drop. So this is an example of drop. This is a drop. This is the base. All these candles, can you see? Sideways movement, not going anywhere here and there. They could be green, they could be red, they could be wicks at the bottom, wicks at the top, doesn't matter. Price is basically moving sideways, which is forming a base and then a drop again. So you have drop, base, drop. And you have here stock moving in a range bound pattern, support and resistance. So price is gone from support to resistance and drops again goes up to resistance. So basically the price is going up and down between resistance and support. Don't worry if you don't understand the concepts of support and resistance. Those will be explained to you in the upcoming chapters in detail. So this is what we have, the various type of candle movements in the market. I hope you enjoyed this. And you can basically, once you get it, once you open an account in TradingView, you can, literally go and basically look at the various patterns in action from what you have seen on the slides. Thank you for watching. I want you to revise this, note down your learnings, and keep learning. All the best. I'll see you in the next chapters. Thank you.